evening, everyone. This is Henry Gamble with SimplerOptions.com, and today I wanted to share some thoughts with you on Apple. So, Apple is coming into focus because you have earnings that are due out next Tuesday after the markets close, and there's just some interesting things going on here that I want to take a look at. Now, I've been playing the short side of Apple and trying to do that even more so after we had this break in the weekly chart. Not so much on the retracement, of course, but essentially saying that if the weekly squeeze is fired short, you want to try and take profits at extensions, which we have made. Then when you retrace, and in this case I like following the 10 and 34 off the weekly chart, this is the next area that you start looking for short opportunities. That's kind of the broad prospects of looking at that. But the thing that I wanted to think about today is it's tricky because from one perspective you look at this and you think, okay, could Apple have a run into earnings which are due out next Tuesday? The thing that I have a problem with on that one is, as far as SPY is concerned, Apple is the most heavily weighted product in this index, and of course we've seen that the spiders have done very well. I just think you've got so many of these markets like the spiders that have done well. They've performed, but they're up near extended parts of their range. You're a stone's throw from the 100-day and 200-day moving averages, not to mention you're right at the upper part of your 20-day channels. So is this really the part where you'd want to come in and try and buy the spiders? Obviously no. To me, the thing that we're looking at here is that you've seen things like Microsoft that have done very well over the course of the past 2 weeks, and these are the components of the spiders that have been helping it so much. Also notice how Microsoft is right up against resistance. The third in the batch is XOM. Obviously this has done well as crude is also kind of piggybacked off that, but today you saw a big flush in crude, and we're also seeing that XOM is near its 20-day channels and 200-day moving averages. So essentially what I'm seeing in this is the components that have led the way are up against key resistance. SPY in and of itself is up near the upper part of its range, and I think they just jump out here and say, hey, I'm going to buy Apple into earnings and look for a run into that report, is not really the way you want to play it. The way that I'm looking at it is to see if we can continue to hold this 21 EMA. In a perfect world, that holds, and then we can try and remain sideways to down into earnings. However, if we do get a second close back up above that level, I'm going to have to get out of the short take of it for a little bit because you might see that that just squeezes a little bit. What I'm saying is ultimately, I think you do not want to be buying Apple. I think you want to be focusing on any strength here, establishing your short side positions. Of course, remember this week, you can absolutely look to sell call credit spreads, as we come up into resistance. Next week is the one that you're going to have to be careful on the increase in IV. So, at any rate, hopefully that gives you another take on how to look at Apple. It's the way that I'm going to be looking to play it into earnings, ultimately saying that this is very much a ticker you want to be careful with and look for downside movement, especially after earnings. So, you guys have a great rest of your night, and I will see you at the next free video.